Hey guys, thanks for stopping by here, thetradinganalyst.com. This is Taylor. We're going to take a look at this chart. I wanted to make a quick announcement before we got into this chart. We are offering a free 14-day trial now at the service. We're so confident that you're going to like it that we're willing to give it away for free. So go ahead and check that out at the end of this video. So let's get into these charts. What I want to point out, I'm going to cover the broad picture here on the market, and then I'm going to bring it in from a larger term picture down into the more specific near term levels. So to begin with the larger term picture, excuse me, sorry for coughing in your ear. So first and foremost, I want to point out that, and this is something we've been consistently saying here for a while, okay? It's not just because of this little drop that we've seen recently. Obviously, this little drop obviously is adding to our confidence, but we've been saying this, since the last update we did on the market. We've been saying that it was going to get rejected right around where it did, and it's kind of just acting accordingly. So we're sticking to our guns here. Obviously, you can't stick to your guns too much. You have to be willing to change your mind. You have to be nimble, especially when you have a time frame of a couple of weeks to just a couple of months like I typically do and we do at the service. So main thing here for the market is I want to point out we had this all-time high. Okay, well, that's the wrong tool. Let me delete it and use this. Okay, so here we go. That all-time high was right here, okay? Then we got rejected here, broke down, and traded sideways. We built up a lot of energy here with all this, obviously we zigzagged, but it was some sideways trading, okay? When you get sideways choppy trading, it builds up energy for the next move. Whether it's up or down, it doesn't matter. When you get that sideways trading, same thing little here, sideways trading, built up energy for that move. Sideways trading right here, built up energy for that move right here. All right? So we built up a lot of energy to break over to those all-time highs, okay, only to break right back under it. So this was a false breakout. All right? When you break over an all-time high, you want to hold that level, okay? Especially because, it'd be one thing if we just broke over it and then kind of broke right back under it, that wouldn't be that big of a deal. But the fact that we broke over it and we held over it for about a month and a half, okay, a month and a half, we had time to rest, okay, and build up energy for that next move higher, okay, that's what we do. We consolidate just like we did over here. Move up, consolidate, sideways trading, and then have energy for that next move higher, okay. We had plenty of an opportunity to head higher from here, and we didn't. Okay, so it's a big deal, in my humble opinion, that we broke over that resistance and then we broke right back under it. And not only did we break right back under it, we didn't just break under it and kind of hold here and then break back over it or anything like that. No, we sliced through this entire year. It took us to grind up to this level, and we just wiped out those gains in 2 weeks. Okay, that's saying something. All right, so pointing out, another thing I want to point out is that we have the Fibonacci retracement level that we got rejected at right here, and I pointed this out in my last video that I made for you guys before this even happened. Okay, before this move happened, I pointed out that we were likely going to see a rejection right where we were at. And I gave myself a little bit of wiggle room, okay? Right here at this 61.8 Fibonacci retracement level, if you draw it from the high here to the low here, 61.8. And I want to talk about something too, because if you don't use Fibonacci retracement levels or you don't know about them, I want to explain to you why they're important. Because typically with a trend, whether it's up or down, in order for that trend to remain intact, stocks or ETFs and indexes typically bounce or get rejected at their 61.8 Fibonacci retracement level. Okay, that's how a trend happens. If you're just bouncing from if we headed down here and then we headed back up here, up to that high, then there wouldn't really have been a downtrend because we're not really trending. We're just chopping back and forth. But this downtrend that we created here is still intact because we got rejected right around that 61.8. Actually, not right around, literally to the penny, right at that 61.8. We also had the 50-day moving average, which is this red line right here, coming into that level. That was another reason that I called for a rejection around this level. And we also have up here, again, I gave myself a little wiggle room up to about 2880, where that previous all-time high was right here, and it was support right here and right there, and that support, once you break under it, turns into resistance. So I said most likely we're going to get rejected around where we did, all the way up to about 2880, and then we ended up getting rejected at that level right here, and also it was that previous high right here. Okay, so with that said, so there's three reasons right there that we were likely going to get rejected right there. Okay, now I'm going to kind of bring it into even closer into the near-term action, and I'm just going to delete that tool so we can kind of clean up the picture for you. So the other thing too is that we came up here and got rejected at this previous high. Okay, so what does that mean? That means we are still making lower lows and lower highs. Okay, so here's a low, here's a lower low, here's another lower low. All right, excuse me. Here's a high, here's a high, a lower high, and here's a high that's equal to that value. So we're still making lower lows and lower highs, all right? So that's more of the recent action, okay? Another thing I want to point out is that we didn't hold this breakout, okay? This breakout right here that we saw, all right? Notice how we not only came and closed below the low right there, okay? And we didn't just come down and fill the gap and then bounce, okay? That would be bullish, okay? We came down and we closed below this area. We went well below this gap and closed below this low as well. All right, we're back under the 20-day moving average. All right, same thing kind of happened over here. It was a little less. It took us just one more day over here, but very similar action. You can see we gapped up. All right, and notice how I'm just going to kind of zoom in so you can see what I'm talking about. Okay. Okay, so I'm comparing this action right here to this action right here. So here's the breakout day, all right? And notice how the next day is kind of a sideways doji candle, okay? I don't want to get too technical on candlesticks. I'm not really a candlestick trader, but I'm just kind of pointing that out for your reference, okay? So here's that breakout candle. The next day was kind of a doji candle. Look at over here, breakout candle, doji candle, followed by a red day that closes below the doji candle's low. Boom, what happened over here? Closed below that doji candle low. And then look at this. We closed below this candle right here, closed below the low of that breakout candle right there. So we didn't hold the breakout, okay? And then as you can see, big move lower after that. Right here, same thing happened, all right? It just happened quicker. We headed up, doji, lower. This candle right here closed below this low and this low, okay? And we closed back under the 20-day moving average. Again, I'm not super, the moving averages to me are just to identify trends, okay? I don't use 20-day moving averages as really support or resistance. I'm not going to buy something or sell something just because it breaks below or above a moving average. But it is a good barometer to show you what the trend is looking like. So we're below the 20-day moving average right there, closing below these lows. Again, we didn't hold the breakout. Okay, on a breakout like this, it's okay to head a little bit lower, but we needed to hold kind of this little support right here. All right, you can see it was resistance there, here, 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 boom, and then we broke back under that support. Okay, you don't want to see that. All right, so most likely we're going to head lower, is basically what I'm trying to get at. And we've got a gap down here that needs to be filled. I think we're at least going to head to this level. Okay, at least. In my opinion, like I said, that false breakout on the market is not a very good look. All right, it's not a very good look. And I want to kind of touch on something else while I got you. We might as well, let's go ahead and, I'll do another video. So if you're interested in looking at Amazon, Apple, Netflix, Google, Facebook, all those stocks, I'm going to make another video. If you want information about that, it's going to impact the market for sure, which is why I was about to cover it. But I'll save it for another video that I'll do next. But if you're interested in that and how it is affecting the market, then watch that video too. So that's my main thoughts about the market. Longer term and shorter term is not looking bullish. We don't have any kind of, the other thing too is that we don't have any kind of reversal signal just yet. Okay, I'm ready to flip long. Okay, I'm ready to flip long on my bias in my positions. If we see some kind of a signal here, if we close, see tomorrow here, I'll tell you what would flip me long. Okay, is if tomorrow we close over today's high. Okay, that would be a really nice reversal signal. Back over this resistance, making this a false breakdown, back over the 20-day moving average, and a close over the previous day's high. Okay, because we haven't seen a close over the previous day's high. That's what I like to see to kind of signify that, okay, this trend, this bounce is for real. Okay, that's what happened right here. You can see that's when I called for a bounce as well in the market. I called for a bounce on this day right here. All right, I mean, I called for a bounce before that, but this was the day that confirmed it. All right, I called for the bounce for a lot of other reasons against this level, but here was the day that confirmed that bounce when we closed over the previous 1, 2, 3 days highs. Okay, and then you saw a nice move here. Now we're just doing lower lows, lower highs, closing below the previous day's lows almost every single day. Today we closed above yesterday's low by 18 cents. All right, but we're still making lower lows and lower highs, and we closed lower than we closed at yesterday. So we're not getting a reversal signal just yet. Okay, that's what it's about in the market. Okay, it's not about predicting. I don't have a crystal ball. Nobody has a crystal ball. Okay, but you have to react to what the market's showing you. Okay, we're making lower lows, lower highs in both the short term and the midterm. All right. Clearly, if you're looking at the overall picture of the market, on the daily chart going back, 2 years, this is obviously a major uptrend. Okay, we're still intact on that major uptrend. Okay, at this point in time. Okay, at this point in time. So that's what you got to remember. Very long term, we're still in an uptrend. Okay, but in the midterm, again, like I pointed out, lower highs, lower lows, same thing in the short term. So hopefully this video helps you out. I really, really hope it does. And if you got any questions about it, I love talking with you guys. So go ahead and comment on the StockTwits video or on YouTube and let me know what you think. I'll be more than happy to answer any questions that you might have. I'd love to hear from you. So again, I want to invite you to our free if you've ever bought and sold trades at the wrong time, you're losing confidence of when the right time is, now is the time to do something about that. We're in a volatile market, a choppy market, and it helps and it pays to have someone on your side who knows what the hell they're doing, okay? Who knows what they're doing. And first and foremost, I want to point out that when you're a member, you're going to get access to our real-time portfolio tracker. Okay, it's going to show all of our positions that we've made. We started this in July. Okay, so it's since July, and we've had about 110, 111 or 12 trades since July. And you can see all of those trades. After every trade is closed out, we put this in the real-time portfolio tracker, and you can see how well we've done, how well we're currently doing, and so on and such forth. So that's what you're getting as a member. You're getting complete transparency, okay? Complete transparency. In addition to that transparency, you're getting a different approach to the market. I'm not going to go over all these things, but go to the homepage and read what we have to say, because I think it's really going to show you why we're different, and I think it's going to show you how we can help you specifically, all right? And the main thing that you're getting here is the easy-to-follow real-time trade alerts. They're delivered directly to your cell phone in real time. You can trade from anywhere. If you've got a job, no problem. You're going to be able to participate in these trades. All you need is a cell phone. Here's just a few examples of some trades that we've sent out in the last few months within the service. And when you are a member, you're getting trade alerts just like this. Okay, if you were a member for these trades, or during the time that we placed these trades, you would have gotten in on this action. Okay, we find the action, you keep the profits. All right, go ahead and check out some of the testimonials, what other people are saying about the membership. Again, it's free. It's free to sign up for 14 days. You have zero risk in signing up. All right, we're that confident that you're going to like what you find within the membership. And if not, that's okay too. Cancel your membership. You won't be charged a penny. As long as you cancel it before the 14 days is up, then you won't be charged a penny. No questions asked. All right? Free 14-day trial. Again, you got the real-time portfolio tracker. Watch your account grow alongside ours. Increase your knowledge immediately. You're going to get access to our full education suite. All right? We're serious about not only issuing trade alerts, but educating you along the way. Our members aren't just satisfied customers. They're profitable traders. Got everything that you need to be successful. So go ahead, sign up for that free trial, and I look forward to really helping you grow your account and helping you become a better trader. So I'll see you in there for that free 7-day trial.